Hello everyone, welcome to the Ichimoku.co daily US stock market review for the trading day ending April 14th. Well, a bullish market for the trading day today. The Nasdaq 100 was up approximately 28 points, up 0.81% to close at 34.74, and the S&P 500 showed gains plus 15 points, up 0.82% to close at 1830. So these modest gains were basically on the back of a better than expected March retail sales report, and also we saw Citigroup bringing in better than consensus results for the quarter. Now tomorrow we have the March CPI figure coming out. Could be an important trading day, and the consensus is 0.1% for the March CPI. In terms of the S&P 500, and here today we saw the buyers coming in, buyers closing with control, a white body candle showing some upside momentum. They are trading within the Ichimoku cloud, so we have a neutral market in big picture terms, a bearish market in the medium and fast term timeframes by trading down below the Kijun-sen and Tenkan-sen. And we also saw the market for the previous days trading closing down below that previous important area of support and resistance highlighted in yellow, and the sellers were that strong that they closed down below that area, and they were able to close the market from trading above the cloud to trading within the cloud, and therefore changing the sentiment in this market. For today's trading, we have seen the buyers come in, but they have found resistance at the top of the cloud. And we can see that the high reached just to the top of the cloud, and we have seen some rejection. So the buyers did lose some commitment up around that area, and also rejected from that highlighted zone. So some very, very important trading coming up tomorrow. If we do see some follow through, we want to see a bullish close up above the cloud and a bullish close up above the top of that zone, which is around the 1841 level. Now if that does occur though, we do have very strong resistance all the way up through the 1850 level, the Tenkan-sen trading at 1855, 1858, so a lot of overhead resistance. To the downside, strong support that we've seen around this area for the trading day for the previous day and today around the 1813 area, and just below there the bottom of the Ichimoku cloud at 1811. Below that area, the round number 1800 should hold as very strong support if we see the market break out to the downside. Now in terms of the Fibonacci extension, and here for the second consecutive trading day, we've seen the market testing around that 100% level and being rejected from there now. So it does suggest that there is potential for a change of trend, but as I've mentioned, we do want to see the buyers coming into this market on a breakout above the Ichimoku cloud. And also important rejection from the Fibonacci retracement. We're in an expansive mode of that. The market's test to the 161.8% level. We're seeing the buyers coming in, suggesting potential for a change of trend. Now this is also a potential bullish harami pattern, and here we have the downtrend in place, the black body candle, the white body candle, which is within the previous body. The buyers here taking control, suggesting a very good possibility of a change of trend, but once again, it all really does depend on how the buyers are building momentum to close the market up above the top of the cloud and above this zone of resistance up around the 1841 level. Moving to the Nasdaq 100, and here we've seen a little bit of yin and yang over the last two trading days. Two candles that are pretty much the opposite of each other. For the previous day's trading, we saw the market, after it broke out down below the 3500 level, we saw the market test to there and be rejected from there for the previous day's trading. The sellers weren't strong enough to test the market lower, and we did have strong support coming in down around the 3422 level. But today the buyers have attempted to take back control. We do have an inside day in bar chart terms, and it is a trading day where the net terms though, the difference between the open and the close, the buyers really haven't made any solid effort here, and they haven't been able to change the trend to the upside, although they were able to close the market up towards the highs, and we did see the sellers losing commitment down around the lows of the previous trading day. So there is some positive here for the buyers, but very, very important resistance at the 3500 level. Now we have a bearish market in all three time frames here, with the market trading down below the cloud, the Kijun-sen and the Tenkan-sen, and looking at the Chikou span, that's suggesting that there is solid downside momentum in this market. But if we look at the distance of the Kijun-sen away from the corresponding price action, it is a long way away, and this market is starting to look just a little overextended. Wouldn't surprise to see some follow through when the trend changed to the upside, but that all does really hinge on whether the buyers can be strong enough to close the market up above the 3500 level. Now if they are, then there is potential for the market to trade up to the 3543 level. Now in terms of the sectors, and here we saw strength from all of the sectors across the board today. The strongest sector was the consumer defensive sector, up 0.89%, closely followed by the energy sector, up 0.88%. The technology sector was up 0.68%, and the laggard here was the healthcare sector, up 0.16%. So just looking at the consumer defensive sector, and here we have a bullish market in the long-term and medium-term timeframes. For the previous 2 trading days, the market sold off and found support at that flat Kijun-sen, and today a change of trend to the upside with the buyers taking control. The thing to watch out for here, however, is the rejection from the Tenkan-sen, and that will be very important trading tomorrow. We will need to see the market close up in a bullish manner above there to give us a bullish market in all 3 timeframes. The Chikou span is still above the corresponding price action, and that's suggesting that there is still upside momentum in this market, and suggesting that we may see that follow through and the market trade higher. In terms of relative strength, here we've seen this market outperforming the overall market, the S&P 500, for quite some time, and it still is up above the Bollinger Band indicators. But looking at the volatility here, we have seen volatility come off, and that does suggest that we may not see that follow through. We could see some congestion, and we might not see the market take out the high of the candle from 2 days ago. In terms of the weekly chart for the consumer defensive sector, and here we see solid uptrending action since the breakout up above both the Kijun-sen and the Tenkan-sen in early February, maintaining price action up above both the Kijun-sen, the Tenkan-sen and the cloud, giving us a bullish market in all 3 timeframes. But it's only been in the last week or so that we have seen the market performing better than the S&P 500 in relative strength terms. We do have volatility ticking up, and that suggests that there is a good possibility of this uptrending price action continuing to the upside, and we have seen that cyclical low in volatility in early March. The energy sector, here we have a white body candle and bullish in all 3 timeframes with this market trending above the cloud, the Kijun-sen and the Tenkan-sen. The breakout above the Tenkan-sen highlights the uptrend in that short-term time frame. One thing to watch out for is the flat Kijun-sen, suggesting that the market is lacking direction in that medium-term time frame, and price action is can be attracted back towards that flat Kijun-sen, so we will be looking for that. The Chikou span is above corresponding price action, confirming the strong activity. Looking at relative strength, we have been outperforming the market for quite some time since late March. We did see that cyclical low in volatility, and we have seen a cyclical high in volatility, and what we're getting here is congestion in line with that volatility coming off. Now we also could be seeing something of a little pennant pattern forming, or something of an ascending triangle. And the important thing here is that the market is making higher troughs within this congestion area, and that's suggesting that the buyers are accepting higher prices within this congestion, and suggesting that there is a real possibility of a breakout to the upside. So we will be watching these highs for a potential bullish close up above them, giving us a buy signal in terms of the congestion and the pattern. In terms of the technology sector, and we saw that bearish breakout 2 trading periods ago, giving us a bearish market in the longer term time frame, bearish in the medium fast term time frames, and prior to that we saw the market attempt to rally through the cloud and through the Kijun-sen and Tenkan-sen and fail, with the sellers coming in strongly. And this suggests that momentum and sentiment in all 3 time frames certainly has shifted towards the sellers in the technology sector here on the daily charts. We have been underperforming the market for quite some time here on a relative strength basis, and if we look at volatility, it is still ticking up, and even though we have this doji type candle which suggests potential for a change of trend to the upside, there is still a possibility of seeing this market continue the trending action to the downside. The Chica span here is below the corresponding price action, so it's confirming that negativity on the daily charts. In terms of the weekly chart, however, and here for the close of last week, we saw the market testing to the Kijun-sen, and trading activity for this week is going to be very, very important. We saw the buyers rejected from the Tenkan-sen for that week's trading, and if we see some follow through here, as we may see after a brief rally on the daily charts, we could see this market change to a negative market in the medium and fast term timeframes. Now, the Chica span is not supporting that negativity. It is supporting this bullish trading that we're having in the long-term time frame, with the market trading up above the cloud, and that's highlighted by the Chica span trading above the corresponding price action. But if we look at the relative strength over this past month since March, the market has been underperforming the S&P 500, where it was once outperforming, and now we have an underperformance, and certainly a possibility of the market grossly underperforming by trading down below the bottom Bollinger Band there. In terms of the volatility, we are getting near a cyclical low, so it wouldn't surprise to see volatility tick up. Now, if that corresponds with a bearish breakout down below the Kijun-sen, we could see this market trading significantly lower. And just moving to the healthcare sector, and here we see an indecisive spinning top type candle where the sellers were in control for the previous two trading periods. We saw the breakout below the cloud, trading down below the Kijun-sen and the Tenkan-sen. The sellers in control for the past two candles, and now indecisiveness with a potential bullish harami pattern. So there is a possibility of this market rallying, and I suggest that if we do see this market rally, it may be short-lived. We could see the market find resistance either at the Tenkan-sen if it does move down, or at the bottom of the Ichimoku cloud if we see the market move substantially higher and through the Tenkan-sen, but then we're likely to see the sellers come back into the market. We have been underperforming the market for quite some time in gross terms, trading down below that Bollinger Band on the relative strength, and we have seen volatility ticking up, and we are perhaps getting close to a cyclical high in volatility, but we could see volatility continuing to increase. So even though we do have a spinning top type candle and a potential bullish harami pattern, there is still potential for this trend to continue to the downside. Technically, we have a downtrend in the first time frame, so we do need to watch the high of that current candle very, very closely. In terms of stocks that are noteworthy in their respective sectors, in the consumer defensive sector, we have the brewer Anheuser-Busch, the maker of Budweiser beer, and here we've seen a gap up today with the buyers closing with control, taking out the peak from a few trading periods ago. We've seen this market outperforming the S&P 500 since late March, and we have a bullish market in all three time frames. Looking at volatility, however, volatility has come off to a degree, so we will be looking for a continuation of the trend to the upside and for volatility to tick up. If volatility does tick down, then there is a possibility of this being high. And just looking at the weekly charts, bullish in all three timeframes. The Chica span is confirming it with the price action above the Chica span above the corresponding price action. In relative terms, we've been outperforming in the market here, trading above that upper Bollinger Band, and we now see on the weekly charts volatility ticking up, and that's suggesting that we could see some decent follow through and bud continuing the trend to the upside. Of note in the energy sector is Halliburton, and here we've seen Halliburton close up 2.55%. Buyers coming into the market strongly following an indecisive spinning top type candle, and the market finding support at the Kijun-sen, which is trading at roughly about 57.50. The buyers have closed with control above the Tenkan-sen, giving us a bullish market in all three time frames, and that's following this amount of congestion that we had between these two Ichimoku indicators. Bullish in all three time frames now, and good confirmation confirmation by the Chica span, and this is suggesting that we could see some follow through here, so we will be watching the high here at 59.53 quite closely. In terms of outperformance for today and over the recent past, and then performing pretty much in line, not strongly outperforming but certainly not underperforming for quite a large part of from the middle of March until now.